If I were a business owner and I wanted to start transferring wealth from my business to my personal balance sheet, here's the steps I'd follow. I'm Daniel. I'm a financial advisor, and I help business owners optimize the amount they pay the IRS, reducing their taxes, and finally start building wealth. In this video, what I want to go over is things I would do if I were a business owner, if I want to start transferring wealth from my business into my personal balance sheet. And what I mean by this is, how do you take the profits from your business and actually move those into your personal accounts? So first, I would look at, one, you need to know the numbers of your business. Before we talk about ever building personal assets, you need to look at to see if you have actual profitable business. Because the importance of having a proper cash emergency fund for your business is just as critical as it is on your personal balance sheet. For example, if you work a W-2 job, you should have an emergency fund built up. What I mean by that is you need to have, 3 to 6 months of expenses in an account that is available and ready, liquid, available and ready for you to utilize when crap hits the fan, when the water heater goes out, when the furnace needs to be replaced, when there's a major car repair. That is just sound financial advice. The same thing applies to a business owner. If you run a business, you need to have an emergency fund built up, so that way when there's a slow month or you're not during peak season, you can float the expenses to keep the business operational. After you have that emergency fund built up, you need to know your numbers. You need to know if you're either undercharging on certain products or services, and then optimize that. So after you've got the emergency fund set up and you've gone through your numbers and you know those, you feel confident on that, first I would start off with setting up a retirement plan. Now, as a business owner, you have a few options. You can set up a simple IRA, you can set up a SEP IRA, or you can set up just a 401k. If it's you and your spouse, you can set up a solo 401k. If it's you and a couple employees, you can set up a 401k, or you could also set up a SEP or a simple IRA. Now, depending on your setup and your situation, you're going to want to set up the right type of account. Each account has different rules, but they are for retirement purposes. Now, there's also the option to have a Roth account or a traditional. Again, based on your situation, set up one or the other. Now, I will tell you this, a traditional IRA is going to reduce your tax bill today. A Roth IRA will reduce your tax bill in the future. But each have rules. Make sure you double check to see if those are going to fit. But first, set up a retirement account. Second, after you set up that retirement account, you need to set up automatic contributions. If you were to go work for a big company, let's say Amazon, and you got your paycheck every 2 weeks, you would elect to have an amount withheld from your paycheck to put into your 401k. It's no difference for a business owner. You need to do the same thing. You need to set up your automatic contributions into a retirement account, so that way money is saved on your behalf, so that way you don't turn to be 65 years old with nothing in the bank. Now, after you've set up your retirement account, set up your contributions, then you need to go through the process to make sure you're putting away enough money, right? Don't look at this and say, hey, Daniel, I save $200 a month into a retirement account. If your monthly cash flow for your household is $10,000 and you're saving $200 a month, I don't care how long you plan to work, you're never going to retire. So if your contributions to a retirement account do not match what your lifestyle is today or expected to be in the future, you're a bonehead. You need to look at the numbers, run the real numbers, and find out what the numbers should be to make your contributions line up with where you want to be. I mean, unless you want to work till you're 85. If that's your plan to say, hey, look, I'm just going to work until I can't anymore, and then what happens, happens, do that. But for the most of my clients, well, let's say all of my clients, they're not looking to end up like that. They're looking to optimize their financial future. So set up your account, automatic contributions, optimize your contributions. Now, that's all on the retirement side. Now, outside of the retirement, you can set up a normal investment account. And again, on the personal side, for the most part, I'm going to recommend this a joint account if you're married. If you're single, then you don't have the option for a joint account with a spouse, or set up under a trust. You can have a trust done up, and a business owner, you should have your estate planning done. Have a trust set up and put the assets in the trust. Now, there's no contribution limits into the assets that go into a trust or joint account. So you could deposit as much as you want in there. Now, important part on the retirement account and the trust account. When you set those up and make contributions, the contributions are not automatically invested. I cannot tell you how many times I've had people come to me and say, hey Daniel, I had to set up a trust account or a retirement account and the growth on it is dog water. And I look at it and in 2 seconds I can tell them what's happened is they put money in the account, but they've never done anything with the investments. They didn't even buy a stock or mutual fund or an ETF. It's just sitting in cash. So yeah, of course it sucks because you've done nothing with it. I'm gonna go pull these arrows. I'll be right back. So now you got your retirement account set up, your contributions are going in there, they're automated, the money's being invested. You've now maximized or optimized your contribution amount so you know how much is going into your retirement account. You've thought, oh, I'm gonna save a little bit more money. That's the key too. If you own a business and you're spending just as much as you're bringing in, that's how people end up broke. Don't be the broke business owner. You need to have somewhat of a budget and at least have a savings amount that is probably 15% of your take home, maybe even more. Now, some can do more, some start out less, but you need to aim for probably a baseline of 15% of the income being saved for the future. Now, if you're older, obviously that needs to be a lot more. I guess the biggest part that this comes back to, and the biggest issue that I see with business owners is that they get so fixated on running the business, which is good. That's how you grow a business and you become successful, you become obsessed with running the business. But they don't take care of themselves. They don't take care of their future. So what happens is they come to me and they say, Daniel, I'm ready to retire. I've run a business for 20 plus years. I have $150,000 in the bank. And I look at that, and without going too far, it's a simple thing to say is, I'm sorry, you can't retire unless your business sells. Now, hopefully the business sells and you come out with a boatload of money, but how much nicer would it be to not be dependent on the sale of the business for your retirement? That gives you flexibility when you go to sell. You don't have to sell the whole thing. You can do a structured sell where it's pieced off over years. And it gives you that flexibility and autonomy. So the biggest thing on this is your timing. You need to make sure that you, start right now. You don't wait, because what ends up happening is it just keeps getting more and more delayed. Just like I talk about with tax planning, most of the time people only think about tax planning once a year, and it's when they're pissed off about how much they owe the IRS. If you're actually proactive with your taxes, you think about them all year and you're planning for it, not just being surprised. Now, if you own a business, I've given you about 5 steps for you to follow to go ahead and maximize the benefit of your business. Because a profitable business making money just goes to waste if you don't transfer some of that value from the business to your personal side. Because eventually what happens is you get a little bit older and you run out of time. And the biggest thing we want to make sure we avoid is not running out of time. So again, don't be a broke business owner.